Let's start with this 6.1% growth rate for 2019, still within the 6 to 6.5% that the government was looking for in their annual target. First off, what did you see as the most dynamic aspects of the Chinese economy?
Well, the growth is still continuing, and the fact that you mentioned it's still about 6% is pretty impressive because of the external environment that we've seen. And there are also some domestic issues coming up in China. If you look at the data, for example, the disposable income rose by 5%, which is one of the lowest that we've seen in over several years, and manufacturing investment actually contracted. So there are some concerns here, and despite that, the domestic economy, the consumption, even though it slowed down, still managed to help that number. And plus, of course, there's stimulus measures that we've seen from China, and I think we're going to continue seeing them in 2020.
And of the reforms that you think proved the most useful for the Chinese economy, especially given some of these external things, obviously a trade war with the United States, an overall slowdown in global growth, what did you see?
Well, the property market, I think they have introduced some measures there that to curb the speculative gains that the property market has seen. Of course, there's the other side of that coin in that a lot of Chinese investors, if you will, they are in property market. They are not in the stock market, so they were affected by this. Interestingly, JP Morgan today said that the property market again is going to take off in China. Given what we've seen, I don't know if I agree with that, but if that's the case, that's good news. But the important thing here is to make sure that the property market does not crash, because it's about 25% of China's GDP. That's what I'll be watching this year.
Now, we did see that China's per capita GDP surpassed $10,000 for the first time in 2019. Back in the year 2000, it was actually just less than $1,000. How did that happen, and how do you see that affecting China's economy now?
Yes, and that is the exact thing that the Chinese government has been focusing on. Move this economy from one based on investment to one based on consumption. That is a very big number. There's another number. It's about 120 million Chinese consumers now with an income of 20,000 and more. That middle class is building in China, and despite the slowdown in economy, the estimates are that that segment is going to grow by 50% or so in the next 5 to 10 years. So that, I think, is going to be the new engine for Chinese economy. And exports, it's not an export country anymore. Net exports contributed about 1% of GDP, so its share has been really, really declining. So consumption is the real thing, and that's happening.
And obviously we have now the signing of the Phase 1 trade deal between the U.S. and China. We do know that still a significant amount of tariffs are still going to be in place. How do you see that affecting the Chinese economy?
I don't want to rain on that parade. I'm not very impressed with the Phase 1 agreement. There are numbers. It was a numbers-only agreement. That's good. The market conditions, they've mentioned that in the agreement too. So 200 billion in 2 years is a very big number to hit, especially at a time when the economy is slowing down. So there is some good news in that we have seen a reprieve from escalation in the trade war. Now we've seen de-escalation, and that's good thing for businesses in both countries because it's going to bring confidence back to a certain extent. But the major issues are still there, Rachelle. There's some kind of decoupling taking place in the tech sector between the two countries. But another part of the agreement that did not catch too much attention was the financial services.
Right.
That is good integration, so there's no decoupling there. Chinese companies, financial companies, actually are not going to be treated differently according to that agreement. So there's some hope and optimism, but I just want to see the purchases. I just want to see those numbers actually starting getting active.
And we certainly did see in that agreement some momentum towards China continuing to open up its markets, and it is continuing with its opening up and reforms. But what are investors looking for in the Chinese market in 2020?
They are very concerned about the impact of reforms on consumption. The property market that we talked about is the major concern here. House sales by floor space has contracted in China, again, for the first time in a long time period. There's another concern that not many analysts are talking about, but the floor space are really saturated in the small, lower-tier cities that China has been advocating to kind of slow down urbanization. So a lot of the investors that I talk to are looking at the property market. If the stimulus measures are good enough to contain a really rapid slowdown in the sector, I think the economy is going to be okay. But if it gets hit, I think the stock market in China as well as economic growth is going to be affected.
property sector, always one to watch in China there. Always good to have you, Saruhan Hatopoglu there, CEO of BERI and CGTN's Global Economics Analyst.